shortly expecting comments from ECB's DeCoste.
All right, everyone, welcome to Back to the Futures with me, Markets and Mayhem. And we're going to be going over several different charts to kind of get a sense as to where we are as we enter the trading day here on Tuesday, May 7th. I'm hoping everyone out there has had a good trading week so far. Certainly saw a bit of a bullish resurgence yesterday, and so far it looks like we're set up for a bit of a continuation of that theme today. But first, let's get to really everyone's favorite part of the presentation, and that is where I read the general disclosure from Bookmap. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so let's get right into it. First, a little bit about me. So I did my first trades back in the .com boom, but I don't really consider that the beginning of my trading journey because it was just 2 trades. And really what it taught me was that I didn't know enough to trade, right? So I bought Amazon, I bought Yahoo. They pretty much doubled the next day. And to me, that didn't really make a lot of sense, to have something move up quite that quickly. So I decided that, if the market normally worked that way, then no one would need to work a normal job. And so I decided, to get out, to take those profits and to learn. So I spent the next several years learning more about how the market trades. And then with my own money, I funded my account in 2005 and started trading more seriously and learning more about how markets function. And, I did pretty well, but I will say 2005, 2006, and the first 3 quarters of 2007, the market was on easy mode. Like you could pretty much, take a page out of the Wall Street Journal where all the stock quotes were and put it up on a dartboard and throw a dart and hit a stock and buy that stock and make money. Like it was just, easy money. The market just was going up, and a lot of different parts of the market were just indiscriminately bid. And that's kind of similar to some of the things we're seeing over the last year and a half, in the sense that there is this sort of, it's on easy mode for a lot of people. And that's great until it isn't. And so I did go through the great financial crisis, and that wasn't when it became not so great, right? It was a school of hard knocks. And what I like to say is we all pay our tuition to the market. It's up to us as students whether we're going to learn the lessons that are being taught by that market. So for me, I had some great trades and I had some disastrous trades in the great financial crisis. But what I really started to do is become more disciplined about how I trade. So during that period of time, I was learning more about how the plumbing that ties everything together works, because it was literally breaking before our very eyes. I was also learning a little bit more about how the market functions, particularly under stress, and that helped me gain a better appreciation for risk management, especially in single stocks, because in single stocks, there really is no downside to your potential loss, just like there's no limit to the upside, right? Downside, you can go to 0, upside, you can go to infinity. But what it means is when you're sizing things in single stocks, because of that risk, you have to be a little more careful. So that was another thing I really grew to appreciate, because again, we saw a lot of stocks go to 0 during GFC. We also saw some of the biggest stocks almost bidless pre-market, Exxon, Microsoft, others in 2008, late 2008. There were some pretty scary days waking up with the Dow nearly limit down, only to have the Fed kind of do a stick save, like a 50 bip cut. Market surges higher by 3%. I mean, the kind of reversals you'd see, the volatility you'd see, it was a formative experience. And so from that, I gained a better appreciation of being more systematic in how I trade. I qualify a lot of my trades based on momentum and price action, and I like to look more and more at options flow. I feel that options play a larger and larger role in setting price in the market. And it's not just the zero TTEs, it's the full chain. For example, the S&P 500 full chain trades 1.2 trillion in notional every day. All of the equity futures contracts put together trade about 400 billion in notional every day. So you can see it's the tail that wags the dog. And I began working with Bookmap in early 2022 because I saw great value in the way their platform displays market data. The heat map, the icebergs, the stops, the other indicators you're able to layer on. To me, as a trader that trades multiple time frames and is always interested in drilling down into the microstructure, I'd never seen a better tool, and I became enamored by it. So much so that I felt like there was just one missing piece to the puzzle. And that's why I built the advanced SPX options visualizer, so I could take the options data I'd normally look at separately and have it all in one place. And we'll do that. We'll look at all that in just a little while. But first, let's talk about some charts across the market here, because I do think it's important to get a sense as to kind of what all is going on as we get into today's trading day. The first one I have on screen is the number of NASDAQ stocks above their 20-day moving averages. This has surged up to 59.47. That is the highest level we've seen in 2024. We have to go back to late 2023 to see anything like this. And so we're starting to see some upside participation expand. The breadth is improving overall, although it's starting to also become potentially somewhat exhaustive, right? Anything above 60, we're very close to that. So it's worth watching how we trade this week, if we start to press into those more exhaustive levels, and if that gives us a sort of short-term area to take some profits in this recent rally. The next chart I have is the NASDAQ new highs versus new lows. One thing we're not seeing enough of, in my view, are new highs. I'd really like to see the new highs levels on this chart greatly exceeding what we're seeing in the new lows by much more than it is, and more reliably, more durably. That's something we're not quite seeing yet, so I'm still a little concerned about the overall upside participation. And remember, the downside that we've seen this year, some of these new lows versus new highs, were actually pretty significant. We started the year off with really promising signs of positive breadth breaking out. Then we had that sell down over the course of late March to the first couple of weeks of April. Now we're starting to pick back up, but nowhere near where we were before. So this is one to keep an eye on. Now, when we look at hedge fund positioning across prime desks, this chart is from Deutsche Bank. They're showing mega cap growth and tech positioning is dropping from those very extended levels, which is healthy. That's what we'd want to see, because we know a lot of the upside participation in this market is driven by the same. So seeing it come off a little bit is encouraging overall. However, that's not the entire picture. The other part that's a bit encouraging is also that we're outside of the buyback blackout for about 50% of the S&P. So that brings back some of those supportive flows that are accumulating shares, which tends to be constructive for the market. This chart from Goldman Sachs has been one to watch because it just shows you the number of companies that are outside of their blackout period. And that's pretty important because corporate buybacks have been one of the largest sources of supportive liquidity for these markets. Now, when we look at skew, we still see a market that's relatively complacent. And what I mean by that is skew here is measuring the distribution between premium on puts and calls in the S&P 500 index options. That skew is very low versus overall positioning. And we don't really see short interest building up elsewhere commensurate with the long positioning to hedge it out. So all this kind of tells me we're not in an incredibly well hedged market environment. I understand that hedges haven't worked so well, so folks have kind of decided they're not going to use them as much anymore. It seems like, at least that's what I'm inferring based on this. But I would just say that as long as the market's grinding higher, this doesn't really matter that much. But if we do see a downturn, this becomes concerning because you got a lot of folks that don't have any insurance against their longs. On the other side of this, now that we're closing in on May OPEX, This also means there's subdued put decay flows, or those Vanna and Charm flows that are often most pronounced in the overnight session as Europe opens, and then in the first and last hour of US trading. Those flows are likely to be a bit subdued given that the put decay is not going to be quite as pronounced. The next chart I have here is of options gamma distribution on the S&P 500 index options chain. This is a naive model that assumes all options bought are bought to open on puts and calls, and it's generally pretty accurate even with the more sophisticated models in terms of where the gamma flip is and where the key levels are. So this is something we have on the Treasury Discord and website for our members. And we also have this for single stocks and pretty much everything optionable at this point. So 5,200, you can see that in the net gamma exposure, that is the largest level on SPX by a lot. That is likely to be a bit magnetic. And so we're looking at cash this morning with an implied open of 51.89. It's not a far stretch to say we could see another, 10 handles on that on cash. And so that's one thing to keep an eye on. The other side of this is we're getting deeper into positive gamma territory. We're almost 1% into positive gamma territory. What that tells us is that more and more dealers are likely to sell rips and buy dips, and that stabilizes the market. It helps to keep things just a little bit more balanced. It's also often associated with more constructive environments. That is to say, you tend to see a market that grinds higher in a positive gamma environment more often. So let's take a look at that same market. Y'all are welcome to screenshot this. I have some key levels that I share for the ES contract. That's the June S&P 500 futures contract on screen. We are above that pivot level for this week. That was 51.4550. And we are grinding into a key level of potential resistance pre-market. But I'm looking at this and thinking, you know what, there's really not a big reason here that we can't potentially grind all the way up to that 5,200 strike. So that would kind of imply us moving about 10 handles higher. Right now, futures are about 52.15 on ES, so 52.25, 52.27. We could get to that level. If we grind much above there, I would be looking at 52.3850 as the next level of price action and volume profile driven resistance or supply overhead to watch. We are in the Ichimoku cloud. That means we're trendless. So that does imply that we're not yet fully recovered from that downdraft. But you'll note we also never got into a downtrend per Ichimoku cloud. And this is a volume weighted cloud, so it is a little different than some. But we never did get into a downtrend on a closing basis in the cloud either. Next one we have on screen is the NASDAQ 100 futures for June. This one actually did get into a downtrend per Ichimoku, and it actually even saw some resistance at the bottom of the cloud before finally breaking back in and neutralizing that downtrend. The NASDAQ, like the S&P 500, is also above my weekly pivot, and we are grinding into some resistance pre-market. We are still in the cloud. This is still rather trendless, so some caution warranted here, but like the S&P, it looks like it's implied to push higher here a little bit, maybe about 0.05% into the open. We'll see how this open goes. However, again, we don't have those same supportive flows from Vanna and Charm, so it's really more about these buyback flows and whether they're able to push us in, and then that key level of options interest at SPX 5,200 that could be a bit magnetic. Zooming into the small caps, comparatively speaking, they look pretty darn good. They are still in the cloud. They did, like the NASDAQ, also break into a downtrend and saw some resistance at the bottom of the cloud before breaking back in. We are above that weekly pivot level that favors longs above shorts, but we are not yet back into an overall uptrend in the small caps. Now, I think the small caps overall are going to move inverse to rates, especially on the 10-year. We do have a big 10-year note auction tomorrow, so that's going to be pretty important for the Russell and for a lot of these other long duration risk assets. So just be aware of that. We've got 3s today, got 10s tomorrow, we've got 30s on Thursday. It's about 125 billion on offer from the US Treasury. It's going to really test the market's appetite for US paper. Next chart we have on screen is crude oil. Crude oil had a head and shoulders breakdown. It broke below this trend channel. It broke below where I thought we may get a bit of a rebid based on prior price action. And now we're balancing around this point of control area. So it's becoming more likely that we're consolidating and potentially forming a bottom here with crude. I do think it could get stuck here for a little while because this is a zone of interest, as you can see in the volume profile, where people really like to transact in crude at around these price levels. So I would be watching for how this breaks. Do we break above or below this zone? So I'm looking above as breaking above 79.08. I'm looking below as breaking below 77.58, right? That's going to kind of tell me where the path of least resistance from there is. A break above is bullish, a break below is bearish, and sets up for continuation either way. Let's take a look at gold. Gold is one that actually was sort of saved by the Fed, ironically. Typically, Fed weeks are pretty terrible for gold, and it started off not so great, but we saw that perceived dovishness and that tapering of QT well received by precious metals, well received by US rates markets, and well received by the euro overall versus the dollar. And that seems to be setting up gold for a potential bottoming here and potentially from there reversing higher back to those recent highs. So we did break that upper trend line. We're still in a state of consolidation here in the short term, but in the long term, we're well above the volume weighted Ichimoku cloud. We're well above some of these high volume nodes. So buyers still remain in control. And if they do rebalance here, I think the path of least resistance is going to remain higher. The next one we have is silver. Silver's got a lot of talk lately, and we had a very impressive recovery back above the trend line. Again, the Fed saved silver just like it saved gold, and we can see that price action really happened because of the Fed. Excuse me, and they're more dovish than expected press conference and announcement on tapering of QT and tapering it more than what the market was expecting as well. So silver seems to have the potential to rebid to the top of this trend channel here. I'm looking at 2303.50 as the next area of potential resistance. From there, I think we could push back up over $29. But overall, silver seems to be positioned to continue moving higher over the intermediate term. And even over the short term, I wouldn't be too surprised to see a rebid today because we see rates moving lower and the dollar is pretty flat. Now on screen, we've got the 10-year Treasury note. This is something that we've been talking about a lot. I believe we're still set to see higher rates on this thing. I don't think that the move lower is done quite yet. But before we do, it looks like we're set to retest one of these prior levels of potential resistance and supply. You can see that in the volume profile, how much supply there is overhead. So I wouldn't be too surprised to see us kind of get up there, kiss that 109.17 level or thereabouts, and then reflect lower when the market really begins to appreciate more just how much supply there is overhead. And the next one we have here is the dollar. This is a very interesting trend line. It's been honoring overall. I know it looks a little bit strange because we had those dips below, but you can connect this across so many points. It's hard to ignore. And it suggests to me that overall the dollar is still, no matter how you look at it, in an uptrend across multiple time frames. And this recent sell down may actually be a bit of an opportunity. But wait, Mayhem, how can you be bullish on gold, silver, and the dollar all at the same time? Well, the reason is that gold can run with the dollar. Gold is mostly a story of real rates. I think the dollar can balance out a little bit, kind of hugging the bottom of this trend channel for a little while as well. But the biggest thing I'm looking for is for real rates to remain somewhat low, and that to be supportive for gold and silver from here. So today is going to be a somewhat busy day. We did get Johnson Redbook a little bit earlier. We also get the RCM Tip Economic Optimism Index at 10 a.m. We have the New York Fed Treasury purchases from the maturities of 0 to 1 years at 10:30. We have Kashkari speaking about frozen lasagna prices at 11:30. 42-day bill auction, and then the big kind of premier event of today, the 3-year note auction, which will really test the demand for U.S. paper at 1 p.m. Then we get the consumer credit change at 3 p.m. and some aftermarket data on API and crude oil just a little bit later. And so we're going to get right into Bookmap. But before we do, I just wanted to do a quick plug for myself. If you want to follow my work, you can follow my posts on twitter.com and youtube.com. Just check out my nickname, Mayhem4Markets. That's Mayhem number 4 Markets. And you can find me on either platform with that name, as well as Twitch. You can follow me there if you prefer to watch streams there. My trading ideas, coaching, and unique market tools can be found at TraderAid.com. So that's where I help traders learn more about how markets work on multiple time frames, build their systems, find their edge. I do one-on-one and group coaching, and I also have unique trading tools that are available on our Discord and website. If you like Bookmap, you can get up to 40% off by visiting TraderAid.com/bookmap. That's TraderAid.com/bookmap. Scroll down to the specials. And the advanced SPX options visualizer that I built for Bookmap is now available on the marketplace. To learn more, visit TraderAid.com/SPX. That's TraderAid.com/SPX. My long-term trading, investment ideas, research, and institutional consulting services are available at macrovisor.com. And I live stream regularly, including for Bookmap, every Tuesday at 9 a.m. So be sure to join me. It's a lot of fun. And now, speaking of Bookmap, we're going to dive right into Bookmap. So give me a sec to just kind of reorient things on the screen, and we'll get right into it. We've got about 9 minutes left until the opening bell. Futures are bid just a bit higher here. S&P 500 bid up about 0.16% ahead of the open. NASDAQ bid up about 0.04% ahead of the open. Crude oil continuing to see pressure here. Down shy of just 1% ahead of the open. Gold just about flat, down 0.1%. Silver bid up just about 0.04%. Kashkari speaking a little bit here, even earlier than he was scheduled to. And a couple of the highlights of what he said is the inflation progress seen in the latter half of 2023 appears to have stalled. The question is whether disinflation is still underway or just taking longer. And he says, I question policy restrictiveness given inflation data, which, I mean, he's not wrong. Now, whether those words will move markets much is a whole other matter altogether. I don't think that they will, because he's been speaking this way for quite some time, so this is not new. But nevertheless, Kashkari weighing in on his thoughts, saying that really he's not seeing the kind of progress he wants to see on inflation. Pre-market, we do have some pretty interesting price action in some of these stocks that are popular trading vehicles. We'll take a look at some of these. One of them is Tesla, down about 2% pre-market here. So I'm just going to find my way over to our Tesla chart. This thing is a volatile trading vehicle. It sort of self-drives all over the chart. And we can see it's just been kind of pulled lower all morning here. We'll just do a backfill, maybe 3 hours of pre-market data. Crocs is another one that's got some pretty significant activity. Pre-market up about 4.24% pre-market. And yeah, you can see what a wild ride with Tesla this morning. You got this big sell down, you have a pop, and now the pop kind of being faded a bit. And you do see a lot more liquidity overhead in the order book on Tesla, about 25%. And just about 5 minutes left before the open here. We're going to take a look at some of these charts of various futures contracts as well. NASDAQ pushing to new highs pre-open here from the overnight session. Reasonable amount of buyer conviction for that pre-market trading volume as well here so far. Just going to slightly shrink the size of the volume bars below us here and set up smart clustering for them. But yeah, we have set up the lines to track highs and lows, and this will help us define those various opening ranges that we like to track. So got the red line up here for the highest price level, the green line for the lowest price level, and I've set this to reset at 9:30 a.m. So, you know, if you want to do this on your end, you could do this pretty easily, just going into your settings under price levels. And I just disabled the middle price level because I have the midpoint from the options visualizer, but you can set up your highest level. You could set up your lowest level, and then you could tell it to reset every morning at 9:30 a.m. And that way, no matter what opening range you're trading, whether it's like, you know, 1 minute, 2 minute, 5 minute, 10 minute, 15, 20, 30, you can just look at where you are on the time slice and see where price is and get an idea of that range, take a note, and then see if the lines move higher or lower based on price. So this has been a neat little trick. It's a free plugin, I believe, for Bookmap, and it just makes it even easier to visualize that data right there on screen. The other thing that I like to do is just clean things up a little bit. I'm not a fan of having a busy chart. So I love the icebergs and stops, but I don't want every single bit of data on screen because it just becomes a little bit overwhelming for me. I really just want to take a look at what's going on and be able to see within seconds, you know, kind of at a glance. So these are my iceberg settings. You know, if you're willing to kind of mirror them out and give them a shot, maybe take a screenshot of your existing settings if you want to go back to them. But I try to keep it pretty aggressive in the sense that I only want to see the orders that stand out, right? I don't want to see every bit of activity. I don't even want to see the filtered icons either because it just creates too much noise for me personally. Now, if it works for you, you know, don't change your settings, but if it doesn't, consider changing it. This is what I do for the stops. It's pretty much a mirror image of the icebergs. And I'm doing a time period of 30 minutes, a standard deviation multiplier of 10, and I'm getting rid of the filtered icon. So what that does is it just shows me where there's something that's worth noting. The other thing that I do to keep it a little bit more straightforward for me is I change the colors. So icebergs are traditionally blue. I've just recently made the sells red and the buys green, right? And the same thing is true of how I manage my stops on screen. Sells red, buys green. So at a glance, I know exactly what I'm seeing. I made the icons a little bit larger as well, so they stand out. And so, you know, that way I can zoom all the way out and I can see kind of where this activity is happening, and I'm only seeing the activity that's of value to me. The other thing that helps me with this is I can see here there's a buy program active on ES, right? Someone put in a passive buy order. 45 contracts have been filled so far. It started right here around 8:52 a.m. So we know now when we get back to this like 52, 10, 50 level or so, there's a passive buyer there that may continue to layer in. So it's important to kind of see how price reacts there, how much demand exists there. But that gives me just a little bit more information, and it helps because of how I've customized it, that at a glance I can see exactly what's going on. Just like right here, I can see there was a buy stop. Some shorts were pushed out. Of their shorts, 94 contracts bought via stops. Just like 70 contracts sold via icebergs here. And you can see it in the subchart as well. So this kind of helps me customize what all I'm seeing. And as a result of that, I get more value at a glance because I don't want to have too many charts open. So I tend to just have Bookmap and TradingView. I keep it simple in the charts. I have some signals and alerts and other feeds and news that I look at. And then obviously I have research that I'm doing during the day for my swing trades. So I don't need to have like a panoply of different charts and timeframes. I actually keep it simple. And that's one of the reasons I really do like Bookmap a lot, because I'm able to put so much on a single screen, right? On this heat map, I'm able to see where there's resting liquidity, where people want to transact, and offers and bids that are limit orders. I can see where they have transacted and the aggression shown by either side. These bubbles are delta bubbles. So larger green bubbles are larger aggression by buyers, larger red bubbles are larger aggression by sellers, right? So at a glance, I get to get a sense as to kind of what the move of the market is. And then on the subchart, I'm able to tally some of these things up, like the cumulative volume delta, where the differential in liquidity has been, icebergs and stops over time. And I just look at that. Everything on the subchart is within this sort of 30-minute time frame that I tend to focus on, except for the cumulative volume delta, which is for the entire session and resets at 9:30 a.m., just like the high and low line. So for me, the way that I use Bookmap is like, no matter what I'm looking at, it gives me a kind of microscope view, right? And then I use things like TradingView or TrendSpider or stock charts or FinViz for my telescope view, right? That way you kind of are able to look at the really short-term time frame. So I'm looking at, minutes to hours to a full day in Bookmap, and then zoom out to the larger time frame of weeks, months, and years, and even decades in some of these other charting programs. When you put them together, for me, it really helps me to complete my process. So the market's now open. Ding, 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 ding. There's the opening bell as simulated by me. And let's see what we've got going on around the market here. So a bit of a sell here at the open. We'll zoom in just a little bit, not much, and it's so far being absorbed. We can see we're building that opening range in the high and low lines here as well. Just kind of keeping it very simple. You can see it reset at 9:30. Now we're pushing higher. We're pulling that high line higher. And within the first 20 minutes of the trading day, we're going to get a very just easy, at a glance view of where those opening ranges are. You can see some liquidity building above here in the S&P, a bit fading below. That tends to be constructive for price action. And you can see those larger delta bubbles. Again, buyers are showing a little bit more conviction so far to start the day. We do have a wall of calls up here from the advanced SPX options visualizer. That could provide resistance. This comes back to that 5,200 level that we talked about pre-market. And to be clear, that's 5,200 SPX, which translates to about 5225.50 in ES. There's that delta between the two. It changes every day. And so I rebalance that every day for the advanced SPX options visualizer as well. And then all the data in the column is updated every minute during regular trading hours as well. So positioning changes are reflected in near time. It's the only tool that does anything like that. And we'll see the flows as they start to come in for the most active puts and calls as well. So as we look around the market, let's take a look at the NASDAQ. NASDAQ looking pretty strong at the open here. Again, some pretty large amounts of conviction shown by buyers. We also have a buy program active. We can see that in this green iceberg below. So there is buying interest just around here, around 18,220. With ES, you also still have that buy program active as well. And here's the Russell on screen, not really showing us quite the same look, looking just a little bit more downbeat, shall we say, over the last half hour. Crude oil getting a bit of a bid here, coming off of its lows, but this thing has been pretty sloppy. And remember, we could be basing out here. We're right around that point of control, but if we do, we could just sort of chop sideways for a while. Often when you get to an area of that much prior interest in price, you kind of chop sideways for a bit unless there's some kind of event catalyst. Natural gas, let's zoom out on this one. This one's been a pretty exciting contract over the last several days. Today, it seems to have started with a bang, and then that was sold into just over the last hour. So we had some pretty high conviction selling here, and we're just coming back in. We do see a buy program active on this one as well, where we see this interest in buying more, but down here around $21.70 or $2.17. Gold coming off of its lows here, but sellers still pretty interested. We'd also see a passive buy here at 23.25 still in progress. And the 10-year note futures contract had, again, one of these really strong pre-market bids. We've seen this a bit lately, and it's just being faded a bit right here. But we did see just recently 1500 iceberg come across as a buy, and then lower than that, we also have another passive buy program still active just around 109.03. All right, all right. Been asked about Palantir, and I will say that this one is one of the real AI stocks. So there is that. AMD on screen not having the best start to the day. I'll get to Palantir here. So I do think that overall there's validity behind this company and what they're selling. It's different than, say, C3 AI. It's different than SoundHound and some of these others that I think are just sort of bubble stocks. But I also think that it got a little bit ahead of itself. So, just a quick chart on Palantir. The big concern I would have on this one is that it is below the cloud. It's now in a downtrend based on that. It also was not able to conquer this area of supply around the point of control. So I think the path of least resistance for Palantir may be a bit lower. Exactly where it balances out, I'd have to look a little bit more at this chart to kind of give you a feel for that. But I'd say, 21.14, maybe we get a rebid around there. That's been an area where buyers have expressed interest before. 21.93 as well. We can see that's been an area where buyers have expressed interest.
According to the oil ministry, Iraq is to hold 5th and 6th bidding round for oil and gas contracts on May 11th.
2034, 1981. Those are levels I'd watch for as potential support areas. To feel more constructive about the stock, I'd really want to get back above the cloud and back above the point of control. I realize that's quite a bit higher, but right now things look pretty precarious. The stock's down 11.74%. And it did have some absorption earlier. We can see that buyer absorption earlier, but we can see that impact kind of fading here as we close below this point of control that was pushed higher and below this VWAP. We're kind of closing in on retesting those lows. So the guidance wasn't great. I think the biggest concern with Palantir was commercial revenue growth is not what we wanted to see. So it does call into question sort of the near-term growth for that AI story. So for now, a little bit cautious based on the technicals and the guidance. Think this thing could rebalance a bit lower from here, but long-term, still believe in the company and their overall potential. And then I was asked, what is my read on gaps just in general? I mean, it depends on the instrument. You can kind of back test and see if gap fills are something that's more relevant on an instrument by instrument basis. I tend to find it's more important on indices and commodities and currencies than it is on single stocks. But at the same time, I think it's something that we could at least note and have on our chart because, you know, even if we don't fill those gaps during regular trading hours, like we saw with Meta, sometimes you fill them in the after hours as well. And apparently that can be a valid fill. And someone wants to look at GEO Group, which is basically a prison REIT. And so the stock's down 5.06%. It is balancing at the top of the cloud here. I'd say it's still in an uptrend as long as it's able to find support. And if it can kind of, you know, begin to push back off of here, it may even end up being a buying opportunity. Just a very quick and dirty look at GEO, but that's what I'm seeing. Let's see if there is any kind of real trend on this one as well. Yeah, overall, it looks like the trend is still intact and the trend is still your friend on this one. So I'd say GEO, even with the less than expected earnings, you know, we're still overall in a country that locks up more of its population than any other country on earth. We're like 4% of the world's population. We lock up about 25% of the world's population. So, yeah, I would be very, we lock up 25% of the world's prisoners, I should say, exist in this country, despite we are only 4% of the world's population. So to correct myself there, still a very aggressive prison state, and that tends to support these companies over the long run. Not a very optimistic thing, not a very pleasant thing, but a very real thing we have to contend with if we're investing in that space. So folks, if you have any questions about anything here, please let me know. I'll be live for another 20 minutes on the Bookmap live stream, and then I'll go a bit longer, you know, on Twitter and my YouTube and Twitch. And we'll be just looking at what all is going on in this market here today. So if you have questions about Bookmap, if you have questions about stocks, futures, other things that are going on, let me know, and I'll be happy to take a look. And if you have any questions about things I covered in my charts earlier, as we were starting off the presentation, I welcome those questions as well. And appreciate everyone tuning in. This is always a lot of fun. I'm here every week, Tuesday at 9 a.m. And I've been working with Bookmap for over 2 years now and really couldn't be happier with the product or the team there. The other nice thing is if you ever have a question, there's a whole community on their Discord that can help you out. And then the folks that run the company are also very responsive and on top of their game. So, you know, that's one of the things that made it easy for me to launch my own plugin for Bookmap as well, was having that support, having that kind of engagement from the folks at Bookmap that make things happen. So big shout out to everyone over there, you know, doing great work overall and helping us retail have a more institutional view as to what's moving markets, which is a big deal. Now, folks out there that do want to check out Bookmap, you can go to traderaid.com/bookmap. Scroll down to the specials. You can get up to 40% off. If you're enjoying the advanced SPX options visualizer on screen here, you can also get that on the Bookmap marketplace. Just visit traderaid.com/SPX to learn more about how it works. And if you want to check out TraderAid, for a limited time, you can get 20% off at checkout using the code Mayhem20 at traderaid.com. And we can see that this is a more liquid market environment. I'm kind of liking the depth of order book here with 55,000 contracts. That's what I want to see. We had a period of time where order book depth was, you know, in the high 40s to mid 40s. During that time, we were in negative gamma. We saw a lot more chop. That's the type of trading environment where you have to be a lot more careful about position sizing. You know, you got to basically downsize and use wider stops and more discipline for your execution. We're back in an environment that I wouldn't say is more forgiving, but at least a bit easier to execute within. So it's good to see that overall positive gamma and a more liquid order book are beneficial for traders of various timeframes, but especially folks that are executing within the day. Someone asked me, when will the crypto winter start? Bitcoin is showing signs it's running out of steam. I don't really care what people say about where we are in this halving cycle. To me, it seems like the cycle is much different as altcoins are not doing anything at all. So that's a great question. I don't know about calling a bear market in crypto, or what they like to call a crypto winter. Like, I hesitate to call for large shifts in advance because anything can happen in crypto. But what I would say is that I tend to look at markets more from a probabilistic outcome perspective than trying to predict things, because I find that when one tries to predict things, we tend to get biases, and those biases can interfere with our trading results. Whereas when we view things in terms of probabilistic outcomes, we can at least line up for what may happen, what the catalyst may be, where price may go, and have trades set up for either side of the move if there is one to be harvested. So that, I feel, is a little healthier for, objectively analyzing trades. So with that in mind, I'd say the likelihood of crypto having a tough time may be increasing, because one of the things that I don't know is necessarily well appreciated is, I think one of the reasons the Fed tapered QT was so they could keep interest rates higher for a longer period of time. So I don't know that it's necessarily as dovish as it may seem. And if that's the case, and they do intend to keep rates higher for a longer period of time, that could start to pull some of that liquidity out that's been supportive. And that would probably hurt some of these longer duration speculative assets, whether it's crypto or biotech or growth or other things that are smaller mid cap. That would be where I would have concern, right? If we see financial conditions really starting to tighten in a meaningful way, I think that would have a deleterious impact on crypto price discovery. Whether that sets up for a so-called crypto winter, that's a whole other matter altogether. We have some different origins of where supportive flows are coming from. We have more access with ETFs and institutions. So I'm not so sure exactly how the next crypto winter would start, but I would say that what makes this halving interesting to me is it seems like it's one of the first halvings that was almost entirely front run. Some are saying this has everything to do with, the ETF excitement, but I saw plenty of folks saying specifically, I'm buying Bitcoin ahead of the halving to front run the move I expect. And sometimes you can pull forward moves that are supposed to happen later when you do transacting like that, when everyone gets the same idea and they start buying in anticipation of something. It can become buy the rumor, sell the news, as the saying goes. So that's my 2 cents. I don't have a firm read on it. I would say that Bitcoin's overall momentum does not look as good as it used to. So that's something to kind of keep in mind. You've got this sort of series of lower highs and lower lows on the Bitcoin chart to be a bit concerned about. So when I'm looking at the chart, from a longer time frame here, this is what I'm seeing. I'm just seeing kind of lower lows, lower highs, especially in this last move. And if this ends up being a lower high and we make another lower low, that really confirms the downtrend for me. So that's kind of my quick, just analysis back of the napkin on the crypto space, in particular Bitcoin. Seeing a bit of a push higher here in S&P. We've got this relatively large resting offer just overhead around 52.22. and we have that wall of calls just a bit higher than that. And we do see some of those resting offers building above us. So this is something to keep an eye on. It tends to be an overall constructive look, but I think that that wall of calls that's around 5200 SPX could be an area of resistance today. It's such a large area positioning. I imagine it's going to be a bit magnetic, could pull price into it. We could kind of get stuck there and maybe even reflect lower. So we'll be watching that. That's something we talked about pre-market before some of this move started, that that was kind of the expected area to run into. NASDAQ, very similar look as the S&P. So if we're looking at this from like a 20-minute opening range perspective, we're just starting to form that top of the opening range really in the next minute here, and that bottom of the opening range. And we can see that in both the S&P and in the NASDAQ. So that's going to be something else to kind of keep an eye on. Do we get that push higher, and do we build acceptance up there? Because that would imply we could get an extension, additional move higher. But the other side of this is a very narrow opening range again. Just like yesterday, it's about 10 handles. Yesterday was about 12, 13 handles. That implies a relatively subdued trading day in terms of the size of the moves you could expect without an exogenous event catalyst pushing them. Jimmy, there's a great video on my YouTube about that. It's a lot to get into in 10 minutes. So I would say how I use Bookmap. Check out my YouTube channel. It's pinned to my my Twitter. It's youtube.com/@mayhem4markets, and look at the educational videos I have. One is where me and Bruce from like last year this time go into how I use Bookmap in more detail.
So in 10 minutes time now, at the top of the hour, do get the release of the Canadian IV PMI. This is for the month of April. The prior read was 57.5. Keep in mind as well, we expect comments from ECB's Nagel, or Bundesbank President Nagel, who speaks at a panel discussion titled Empowering the Single Market, Opportunities and Challenges. No indication of a text or Q&A, but the event details are available on Nagel's entry in our calendar.
So that's where I would kind of go with that, Jimmy. And then next time, you know, if you can bring me that question just a little earlier in the stream, I'd be happy to dive into any follow-up you have. I just want to make sure that for that last 10 minutes, I don't get into something that I feel like is going to take me longer than 10 minutes to do a good job covering it for you. The Bookmap team can help you out with that. It depends on what kind of package you get. So, you know, there's Bookmap with DX feed, just base package, Bookmap with Rhythmic, just base package, and then you can add on layers like additional functionality. On my screen, you'll see I have icebergs and stops, and I have the SPX options visualizer and a couple of other add-ons that are a bit extra. So the way I do it is I have Bookmap Global Plus. You can get up to 40% off using the link traderay.com/bookmap to get Bookmap Global Plus, and then you need your data provider and to figure out whatever add-ons you may want to add. So that's how you kind of determine the cost, but you get up to 40% off using our link, which can help a bit on the software subscription itself. And so, folks, as we get closer to wrapping up the Bookmap stream, just want to kind of reiterate what I said earlier, which is that it seems likely we could test this call wall around 52, 25, 50. You know, if I'm looking for that type of a move, if I was trading that type of a move as my bias, as my setup, I would be looking to get out about 1.5 handles to 2 handles below that level, because often what we see is this reflection around key levels rather than just necessarily going right up into them, especially that first impulse move. That gives me the opportunity to trade a little bit more. I might miss a couple handles, I might miss a little bit of profit, but I'll have more opportunities and more probability of those successful fills. So that's how I'd be approaching that. We can see market pricing just sort of dilly-dallying around this point of control, getting rejected so far. And now we're getting to the point where we can see the call activity and the put activity. So we can see the most active calls up above us here around 52.45 and 52.35.25. We convert those SPX level calls into ES. And then the puts, not nearly as much conviction, twice as much volume on the two most active calls and puts. So that also just gives you a little bit of sense as to where sentiment is. I know some folks like to pay attention to ES options, but it is minuscule compared to SPX. It really is like this. SPX options are the big daddy, 1.2 trillion in notional trades hands every day. Then it's SPY, then it's ES at the bottom. So ES options don't tend to really move the futures market or the underlying market that much. The reason I say that is because we got to focus where there's the most important data in the options market, and that's going to be SPX if we're trading ES. If we're trading NQ, it's going to be triple Q. Speaking of NQ, here it is on screen. We do see a bit of a stop out down here. That was a little exhaustive for this contract. You can see what a big difference between NQ order book depth and S&P order book depth, right? NQ order book depth is like 9,000 and S&P order book depth is like 56,000. So you can see you got to kind of adjust what you're looking at for the relative depth here. NQ breaking below its opening range here, this 20-minute opening range, just by a little bit. And we had in that move an exhaustive stop out, those 166 contracts sold by prior longs. And then we've got the Russell 2000 on screen. It actually was starting to push up the top end of its opening range, but no decisive move there. No real decisive move in the S&P per that 20-minute opening range either. Let's take a look at crude here. Crude starting to make a push lower overall in that 20-minute opening range, and we still do have that implied buy program just a little lower as well.
In 5 minutes time now at the top of the hour, we get comments from ECB's Nagel. We also get the Canadian IV PMI for April. The prior read was 57.5.
Been asked if I can show SPX in Bookmap, but I don't trade SPX. I trade ES and SPX options. And so because there's not a futures contract for SPX, you really are best served watching it via ES or SPY, right? So on screen, we have the SPX options visualizer on the right side. That is taking SPX options activity and converting it to ES levels and updating every minute throughout the trading day. So we can see where the most active calls are, where the most active puts are, and where positioning is that could act as support, resistance, or magnets. And that's all part of that SPX options visualizer package. That's an add-on to Bookmap if you're trading the ES contract. Now, in the works, there are some other cool things. I'm working on a tool like this for SPY, for QQQ, and for some of the Magnificent Seven stocks that are very popular in options like NVIDIA, Apple, Microsoft, Tesla, Google, and Amazon. And we can see those, some of those buy programs from earlier still implied as active. S&P down here around 5210. NASDAQ down here around 187, 188. And Russell, the opposite. You do have that implied sell that happened earlier, but they finished that out. You could see on that second push, there was another 56, and that completed that passive sell. Crude oil also still has that passive buy down here around 77.91, and natural gas down here around $2.17. It continues to push higher up here into the point of control. Gold, pretty boring trade here, just sort of in the middle of its range. And with these 10-year futures, lots of absorption by buyers in any weakness. Another one where there's an active buy program here, just around 109.28 or 109.028. That's something to keep an eye on as well. And then in the euro, similar look here, just kind of boring chopping in this range. And, there's not really a lot of catalysts for the currency pairs to move too much today until that bond auction. Now, if the bond auction comes in lighter than expected, that is to say we see a tail and a poor bid to cover, that could push short end rates higher. That could give a bid to the dollar and put pressure under the euro. That scenario would also be probably negative for equities. On the other side, if it's a really good auction, that is to say there's no tail and we have a strong bid to cover, then we could see the opposite. We could see rates come down on the short end. That could be dollar negative, euro positive, and it could be good for risk assets. So I think the biggest event volatility catalyst of today will be that 3-year note auction, where the results will be released just after 1 p.m. Eastern.
A 1 minute remaining for the Canadian IV PMI. Also shortly expecting comments from ECB's Nagel.
All right, folks. So I'm going to wrap up the Bookmap portion of this stream. If you want to hop over and continue, I'll be live for a bit longer here. I'm just going to take a quick break, but the stream will be live on Twitter, on YouTube, and Twitch. You can find that on my pinned tweet, twitter.com/mayhem4markets. That's mayhem number 4 markets. If you're interested in checking out what I do at TraderAid, check out traderaid.com, where we help you sharpen your trading edge. We do one-on-one coaching. We have education, trade
10
ideas,
seconds.
and a great Discord community that's welcome to traders of all skill levels. There's no stupid questions. It's all about making sure we help you become a more consistent trader. You get 20% off your first month or quarter by using the code
63 for the Canadian IV PMI.
You can use the code Mayhem20 at checkout at traderaid.com. If you're interested in Bookmap, highly recommend checking out this program. Go to traderaid.com/bookmap for up to 40% off. Scroll down to the specials. The advanced SPX options visualizer is available in the Bookmap marketplace. To learn more, you can go to traderaid.com/SPX. That's traderaid.com/SPX. And for those longer term traders and investors, as well as institutions, check out macrovisor.com, where we help investors and traders that are of longer time horizons take macro and momentum and find longer term opportunities. So thank you everyone for tuning in to this Back to the Futures with Markets and Mayhem. I will be hopping off the Bookmap streams and I will be moving over to mine, but also check out the content that the folks at Bookmap share every day. They've got so many great people on their live streams and on their Discord helping to educate. So always recommend them and their product as well, of course, which I use every day. Thanks again, everyone. I'll see you next Tuesday, 9 a.m. for Bookmap on Back to the Futures with